For a little while in the past, I used to be a little bit of a gambler. I would buy options, I would put in the sports bet here and there. And of course, gambling is terrible. It's for the house to win. The house is always going to win when you gamble. I don't want to talk about the financial side of things in this video. I want to talk more about why people seem to gamble, why everything seems to have become about making quick bucks and putting down a bet, getting back three times, five times, 10 times your money. And I think all of this can be attributed to the way that we live today with fiat currencies. So let's get started. One of the things that I would always imagine is getting a payout for, let's say, $10,000, $20,000, $50,000 from a $50 bet. A lot of people do this. A lot of people put small bets, sprinkle money here and there, expecting a massive payout. And at the end of it, it doesn't happen. So what they're doing is they're just wasting their money. The reason why they even look at things this way, in my opinion at least this is how I thought, is that things are just going to continuously get worse. Everything is going to continuously get more expensive. Your life is going to get less and less affordable until you really can't afford anything. And you won't be able to enjoy your life until you're 50, 60, 70 years old. If you don't gamble, if you don't put your money on this random bet, on this random team, if you don't do any of that, you're going to be working until you're 70, 80, even 90 for the people who do survive to that point. Keep in mind that most people don't have any savings at all. So they are going to be working until the day that they die. I think that Bitcoin fixes this gambling epidemic. Today, our day-to-day lives are so smooth. They're so, I guess, stable. When we work a job, we're consistently getting a paycheck. We're consistently paying our mortgages every month. We're consistently making our payments for whatever we want to buy. And because of that stability, I think that people try to find chaos. They try to put their money into things that are complete gambles, complete guesses. Nobody knows who's going to win a game. Nobody knows who's going to lose the game. Nobody knows where the stock is going in the short term. And we bet on the tail events that are supposed to give us these 10x, 20x, 30x returns, the things that probably won't happen because we want to dream about where that massive win could take us. So instead of having to work till 70, 80, 90, we risk everything we have in the current time, paying for these things that could give us retirement in our 30s, 40s, 50s instead. And keep in mind that the entire system is actually designed to get us to think this way. If you don't understand the financial system, you're not going to know about stocks. You're not going to know about how to invest in REITs. You're not going to know about how to invest in index funds. You're not going to know that the S&P 500 has given investors an average of a 10% return per year over the last 100 years. You're not going to know any of this. All you're going to see is that you have your savings in a bank account. The bank is barely paying you any interest. And at the same time, your cost of living is increasing. So your savings are essentially going to zero and you can't do anything about it. You have no idea what you can do. You haven't even heard of financial literacy. All you think is that the stock market is too risky. And keep in mind, the entire financial system is designed to make you think this way. They want you to invest with them. They tell you that the stock market is risky. They spread all this propaganda telling you that the stock market is risky because if you invest through them, they make more in fees. Keep in mind that I'm a CFA. I have my CFA charter. I used to work in finance for almost 10 years. I'd see people putting their money into these funds because they thought that they would perform really well when all they had to do was buy the S&P 500. They could just buy the SPY fund and they do perfectly fine. The issue with the S&P 500 only giving you a 10% return is that you're not going to be able to retire until you're 60, 70, 80 if you invest 20% of your money. We expect that inflation is going to be 2, 3, 4%, so we think that this 10% return is perfectly fine. The people who invest in the S&P 500, they end up doing okay. They retire at 60, 70. At some point, they actually can retire. That's the point. The people who don't invest in the S&P 500, They work their entire lives, they delay gratification, and by the time they're at the end of their life, their government has extracted all of the value that they've saved. So the way that they see it, at least the way that I saw it, was that instead of waiting until I'm 70, 80, 90 to see that my wealth has already been stolen, why don't I just put in these calculated bets into stocks that maybe the world hasn't figured out yet, um, people haven't seen yet. Why don't I put my money into these stocks? They were penny stocks. Keep in mind, I wasn't as educated on this as I thought I was. So there were penny stocks. I'd be buying these stocks. And the way that I saw it, if I could put my money in, get it out quick, I'd be perfectly fine. And I think what Bitcoin does is it solves that problem. You no longer need to find the needle in the haystack. You no longer need to gamble. You no longer have to buy these random stocks, these penny stocks, these companies that have really no future, that you don't know what they're even doing. You don't have to buy options, day to day options with 0 days to expiry. You can just dollar cost average into Bitcoin and get a very respectable return. Keep in mind that the world still thinks that inflation is 2%, when in reality, it's probably closer to 7 to 10%. If we take a look at the M2 money supply, this is the amount of money in the system, US dollars. If we take a look at this number, we can see in 1959, there were $286.6 billion in the financial system. Today, there's 21.561 trillion with a T, trillion dollars. So what's happening here is the Federal Reserve is printing more and more money, adding it to the economy, and your savings are losing value. We think that inflation is only 2%, but you also have to keep in mind that over time, things should be getting cheaper to make. So we get better at making tractors. We get better at building houses. We get better at making microphones. We get better at making cameras. Why is it that the cost of everything is still going up? The reality is that the cost of living should be decreasing 3 to 5% every single year. Deflation is a good thing, but you've been told that deflation is terrible. So we can see here that this number has gone up 7 to 8% per year since 1959. And what's happening is that the money that's being printed is being transferred to anybody who owns real estate, who owns stocks, who owns bonds. All of those people are getting this money supply increase, while the people who have been working, who have been saving for their entire life, their savings are being diluted. So back to what I was saying before, we think that the inflation rate is 2-3%, when in reality it's closer to 7 to 10%. The amount of money in the system is increasing by 7 to 10% per year, meaning that more money is chasing the goods that we want, like let's say food, let's say housing, shelter. All of those things are being demanded by people who have more and more money over time, and to fulfill their need, they're willing to pay more. All of that money being paid for those necessities is going to the people who own the companies that produce those necessities. So if you're a stock market owner, your wealth is going to increase significantly. But if you just hold cash, your wealth is decreasing significantly. We're told that the S&P 500 is risky, that you should stay away from stocks, that you should stay away from the housing market because borrowing money is risky. All of that stuff stops the average person from investing. The average person doesn't want to invest because they want stability. They think that if the S&P 500 falls 10, 15, 20%, then it's over. You need to understand that holding assets for the long term is the key here. But again, if the S&P 500 is giving you a 10% return, and the inflation rate is 7 to 8%, you're only getting a 2% real return if you buy the S&P 500. If we take a look at this compound interest calculator, let's say you're investing $10,000 a year, your monthly expenses are $5,000. The expense inflation rate is 8%. That's the real inflation rate. You withdraw 4% per year whenever you are able to start withdrawing. You get an annual growth rate on your investment of 10%. And you get a cost of living raise every year of 3%. What's going to happen is you're going to be able to retire in 2079. You're finally going to be able to withdraw 4% of your portfolio to be able to cover your expenses in 2080. So are you willing to invest $10,000 per year until 2080 to finally be able to retire when you're in your 70s, 80s, 90s. Now, let's say inflation was only 7%. The real inflation rate was only 7%. You can retire in 2071. Let's say the inflation rate is 5%. Keep in mind that whatever governments tell you, whatever numbers they tell you are false. They're not real. They're not going to tell you that inflation is 7, 8% because they want you to hold on to US dollars. They don't want you to look for an exit. So if inflation is 5%, we're being very conservative here. I showed you what the numbers are like. This number has increased by 7% per year. In Canada, it's even worse. This is in the US. Canada prints even more money on top of whatever the US prints. So let's go back to the compound interest calculator. Let's say inflation is 5%. We've already discounted this by 2%. So 5%, you'd be able to retire by 2060. So let's go back to this 5% inflation rate. You'd finally be able to retire in 2060 when you're at least 55, 60, 70 years old. This doesn't even include having kids. What is this number going to go to if you have kids? What is this number going to go to if you have to take a parent to a nursing home? What is this number going to go to if you have a sick family member? This is going to increase significantly. So what's going to happen to your retirement? So now the problem here is that people don't want to work until their life is over. They don't want to work until their back stops working, until their legs stop working, until they start breaking down. They want to enjoy their life today. So what they do is they make these bets and they try to win. They try to make this jackpot today. That's why we see casinos always full. That's why we see lineups at the lottery offices, the lottery desks, wherever you go to a convenience store. That's why that happens. That's why we see people dreaming for a future that's very likely never going to be a reality. So now what Bitcoin does is it gives you a much better return than the S&P 500. In the short term, there's a lot of volatility. People don't like volatility, like I said before. They want stability. They want to be able to get a consistent paycheck. They want dividends. They want tax benefits. They want to be as stable as possible without having the high expenses that come with stability. So what they want is the S&P 500. Bitcoin is going to give you a much better return, but it's going to be extremely volatile. So we can see here the last 14-year compound annual growth rate for Bitcoin has been 127%. We can see here in the last 8 years, it's given you 72%. In the last 4 years, it's giving you 12%, of course, but keep in mind that Bitcoin, at least in my opinion, is in the beginning of a bull run. The US just recently announced their strategic Bitcoin reserve. So I think this number is going to go up. I could be wrong. I think over the next 4 years, 5 years, this number is going to be higher. So the next 4-year period is probably going to be significantly higher than what it is today. And people don't want to deal with that. That's one of the main things here. People don't want to see their asset going up in value and then coming down, going up and coming down. But this is where the returns are made. What they do is they rely on stability in their real life, and then they put all of that chaos into their gambling habits, into, let's say, whenever they go to the casino, they keep pressing the button, and they have no stable payout. They're just getting paid very randomly. So instead of putting all of your money into this stable asset, into the S&P 500, which is going to give you that 10, 12% return, we can see how consistent these returns have been. 12, 11, 10, 13, 10, 11, 22% over the last 2 years, 12% over the last year. We can see how consistent these returns are. So instead of looking for consistency in your savings, try to embrace the volatility that comes with Bitcoin. And I think that you're going to get much better returns. And I actually think that it's going to satisfy your thirst for that chaos, that volatility, that gamble. Now, I'm not saying that Bitcoin is a gamble. I actually think that it's pretty much guaranteed. Maybe there's a 0.01% chance that it fails, 0.001 chance. I don't know what the chance would be, but I think it's very small that it fails. But this volatility, at least in my opinion, is going to satisfy your thirst for dopamine. And I know that a lot of people are gambling because they want those 70, 80, 90,000% returns in a few days. But the good thing with Bitcoin is that you can put significant amounts of money into it because you know that over the long term, it's going up. When I went to the casino last for my cousin's bachelor party, I saw people at the high roller tables putting $20,000, $30,000 on one hand of blackjack. Imagine instead of wasting that money on blackjack, they bought Bitcoin. Imagine they bought zero point 0.2, zero point 0.3, zero point 0.4 Bitcoin every single day. They're going to get higher returns. They're going to be much better off over the next 10, 20, 30 years. And those returns are going to keep coming. They're going to compound over time. You don't just put your money on one 30-second bet and give away everything. You get that dopamine rush for the rest of your life as you see Bitcoin's price continue to climb forever. If you know that Bitcoin is going to $10 million, $20 million, $30 million, why wouldn't you want to put some money into it? If you really want to retire early, I think that this is the way to go. But the only way for you to actually get to that point where you think that Bitcoin is going to 10, 20, 30, $50 million is for you to study it. If you don't study it, you're not going to see why Bitcoin is going to those levels. And you're going to continue to gamble. You're going to continue to make stupid decisions that lead you to having nothing over the long term. Learning about Bitcoin, I think, will completely stop you from wanting to gamble on, let's say, options, on random penny stocks, on sports. It's going to stop you from wanting to do that because your money is going to be going towards something that you know will give you a return over the long term. It'll give you a much better return than anything that you can do with random gambles, uneducated bets, because trading algorithms are going to kill you on all of those random bets that you're going to make. So my main point here is study Bitcoin, put your money into Bitcoin, understand that Bitcoin is not a gamble, but it does act like one because most people don't understand what it is. The price will be very, very volatile. If you can embrace that volatility, you'll do very well and be happy. That's it. You don't have to think about which company you're going to buy. You don't have to think about how stupid the decisions that the executives are going to make are. If you need help or any guidance on studying Bitcoin, understanding where Bitcoin is going, understanding why I think Bitcoin is going to $10 million or more, you can book an appointment with me. The link is in the description below. I also have a link below if you want to book an appointment with the Bitcoin Way. They'll help you with your cybersecurity. They'll help you with your self-custody. They'll help you with purchasing Bitcoin. You can book a free appointment with them in the description below just to see what they do. Stop gambling on things that you don't understand. Stop making uneducated bets. Study Bitcoin. Buy as much Bitcoin as you possibly can. And I think that you're going to be able to retire a lot sooner than you think you will.